A single decision by President Trump to impose a 10% tariff on Canada's natural gas and energy exports has ignited a series of events that are reshaping the global energy landscape. This move, seemingly small at first, quickly sparked a dramatic shift, challenging America's long-standing dominance in the energy sector. And this shift didn't stop with Canada. In less than a month, over 180 countries felt the impact, and nations like Qatar swiftly redirected their gas supplies to Europe. To put it in perspective, the massive pipelines that previously delivered energy to states like Texas and New York are now being rerouted to powerhouses like Germany, France, and the UK. A new era of energy alliances is unfolding before our eyes. But what happens next? Will these changes trigger a major retaliation from Canada and Qatar? Could this force President Trump to reconsider his position? Let's take a deeper dive into how this chain of events unfolded and what it means for the global energy market. The Tariffs Arrival, a shock to U.S.-Canada relations. At the start of 2025, after being sworn into office for a second term, President Trump imposed a 10% tariff on oil and gas imported from Canada. This policy immediately set off a crisis between the two neighboring countries. Canada had been the largest supplier of crude oil to the U.S., providing nearly 4 million barrels per day. But by March 2025, this supply was now subject to a significant tariff, cutting into the economic relationship that had existed for decades. The ramifications were immediately felt. U.S. refining companies, already struggling to secure affordable and reliable sources of oil, faced even greater challenges. Meanwhile, Canada found itself searching for new buyers to make up for the loss of the U.S. market, where 90% of its oil exports had traditionally been sold. Canada's pivot to Europe and Asia faced with the tariff on its oil, Canada had little choice but to shift its energy exports toward Europe and Asia. This wasn't merely a reaction to the tariff, it was a strategic move. The energy crisis caused by the Russia-Ukraine war had already driven European countries to seek alternative sources of liquefied natural gas, LNG. By the first quarter of 2025, European LNG imports had surged by 23%, a stark increase from the previous year, and Canada had an opportunity to step in. Canada's response came swiftly with the expansion of its LNG export capacity. The first shipments from its new LNG terminal at Kitimat, British Columbia, are expected to begin in mid-2025, with the project capable of exporting 14 million tons of LNG annually. This was a crucial development for Canada, enabling the country to directly enter the European and Asian markets and reduce its dependency on U.S. customers. Qatar's strategic expansion and market influence. At the same time, Qatar, already a key player in the global LNG market, saw an opportunity to expand its influence. Known for having some of the world's lowest LNG production costs, Qatar wasted no time in increasing its export capacity. By 2030, the country plans to boost its annual LNG production from 77 million tons to 142 million tons, an 85% increase, aiming to supply both Europe and Asia. This wasn't just about capitalizing on the U.S.-Canada tariff dispute. It was part of Qatar's broader strategy to exert more influence over global energy markets. With the U.S. focusing on its own energy policies and Canada turning westward, Qatar has secured long-term contracts with European energy giants like Total Energies and Shell. These deals, worth billions of dollars, will allow Qatar to dominate the LNG market by the end of the decade. If you found this video insightful, don't forget to hit that subscribe button. Stay tuned for more updates and content. We've got plenty more coming your way. Europe's energy crisis and new alliances. Europe's energy landscape has been in turmoil, particularly since Russia's supply of natural gas to Europe was severely cut off in the aftermath of the war in Ukraine. With Russia's share of the European gas market dropping from 40% to less than 10% in a matter of months, European countries urgently needed to find reliable energy sources. This vacuum has allowed both Canada and Qatar to step in and form new strategic energy alliances with the European Union. In fact, Europe's LNG imports are set to rise by 25% in 2025 alone, as countries rush to replace Russian gas. Qatar has already secured long-term deals with European nations, including a major agreement with France's Total Energies for 3.5 million tons of LNG annually, starting in 2026. Meanwhile, Canada's role is growing as its LNG exports from the Kitimat terminal begin to flow into Europe. The U.S. energy dilemma. Despite its vast resources, the U.S. is now facing a dilemma. With gas prices soaring and domestic infrastructure under strain, Americans are feeling the effects. Gasoline prices in eastern U.S. states jumped by 20 to 40 cents per gallon, and the consequences are now being felt across industries. Major companies like Stellantis have shut down operations due to high energy costs, laying off thousands of workers. The U.S. government is scrambling to address this crisis by pushing for rapid upgrades to its energy infrastructure. However, with Canada and Qatar solidifying their positions in Europe, the U.S. risks losing its energy leadership on the global stage. The growing role of LNG in diplomacy. Today, LNG is no longer just an energy commodity, it's a tool of diplomacy. Qatar and Canada are using their energy exports to secure long-term strategic alliances with Europe, positioning themselves as critical players in the region's energy future. Meanwhile, the U.S. finds itself caught between maintaining its protectionist policies and embracing a more collaborative approach to restore its influence over the global energy market. What's next for U.S. energy policy? The future of U.S. energy policy is unclear. Should Washington continue down its protectionist path, or is it time to reconsider and open up to international partnerships? To regain its global position, the U.S. will need to invest heavily in infrastructure, both to meet the growing demand for LNG and to stay competitive in an increasingly multipolar energy world. Drop your thoughts in the comments, and don't forget like and subscribe for the latest updates on global politics.